Bitcoin right now is coming up to some massive resistance right here. Are we able to break out to the upside, or are we going to get rejected and are we going to see a further correction? We will have a look at that in today's video. Also guys, are we right now at a massive macro top in the regular financial markets, and are we going to see right here a multi-year long bear market? Well, there is one person that is actually talking about that is called Robert Prechter. You might heard that name, and I want to mention that in today's video because I think his theory is quite interesting and it really connects with the vision on the markets that I have with the 16-year cycle. So yeah guys, let's jump straight into it, and let's start with Bitcoin. It looks like Bitcoin is forming kind of a megaphone formation right here, or a broadening wedge where we actually the pattern gets broader, as you can see right here. But the support is very clean, being held by Bitcoin, and the resistance is being rejected basically. Is Bitcoin right now looking bullish or bearish? Well, when we have a look at the derivatives exchange data, it's actually not looking too bad, guys. We have a green triangle over on the wheel algo, which means that the trend most likely is to the upside. Right here, the funding rates are coming down. We are seeing the take buy sell ratio going up. The only thing that we do see is that the accumulated volume delta is coming down, which means that volume is actually coming down, but that doesn't always have to be bearish, because sometimes the volume also comes down in consolidation periods and then the volume breaks out again when we see a continuation. I'm sticking to my confirmation chart right here, which is the stablecoin dominance, which right now is of course at a massive support level right here. And if we can lose that support right here, then I'm going to see a nice rally in the Bitcoin price, guys, and that can actually push Bitcoin quite high, because if we were to zoom out on this chart, you can see that the next major support after breaking this might be here at 7%, might be even here at 6.25, but the next Fibonacci level right here is at 5.6. So this drop, guys, is kind of insane, because that would be a similar move as what Bitcoin already did from the 25k regions all the way up to 38k, right? That was this specific drop. So if we would have another drop like that, that would be quite an insane rally on the Bitcoin price. So I think it's definitely bullish, but I'm still a little bit skeptical, as we didn't really got a reaction yet from this support. And it would make sense to still get that bounce right here, but it's not necessarily needs to happen. I think right now it's just important to wait for confirmations. Beautiful thing right here, guys. Well, Bitcoin actually is consolidating. We are seeing the trading volume of Bitcoin NFTs going absolutely crazy. We have a trading volume of 37 million US dollars. And we can see that on Ethereum on the last 24 hours was 6.7 million. So that means, roughly 7 million. So that means that Bitcoin roughly had a trading volume in Bitcoin NFTs almost 4 times to that of Ethereum. And if you then have a look at the market cap of Bitcoin NFTs and the market cap of Ethereum NFTs, there is a huge divergence in those, because the market cap of Bitcoin NFTs is very, very low compared to Ethereum NFTs. So I'm definitely very bullish on ordinals, and I might even reinvest right now at these specific levels as well, as you can really see that the narrative is being set and ordinals really are basically catching the stage right here in the crypto space. But there is a very big but, and that is the regular financial markets. And I know a lot of people, we all know that that sooner or later a recession is coming. The big question is, of course, when will that recession occur? How will that look? We all know that the path that we are taking in the regular financial markets, or the money printing, or the interest rates right now that are very high, we all know that path is definitely unsustainable. And I've seen a theory from one person. He's called Robert Prechter. I read actually a book of him, and that book is called Conquer the Crash, and there he explains exactly, if we see a massive crash on the stock markets, how can you survive and thrive? Like, buy gold, but don't buy futures gold, buy physical gold, buy cash, like diversify in different currencies, stuff like that. So it was a very interesting book to read, and when I heard his theory about the stock market, I actually was kind of interested, because I was like, wow, that's actually really fitting with the vision that I have with that 16-year cycle. So what Robert Prechter says is that since the 90s roughly, we are in a 5-wave structure in a long-term secular bull market, which eventually will come down with a very, very aggressive move to the downside, multi-year long bear market, maybe even a 10-year long bear market. Don't get scared now, but that's what he's saying. And he says that this move, this bounce that we have right here, is actually a wave 2, and that this one is followed by the wave 3. And wave 3 is known to be a very strong wave in the certain direction wherever that wave is. So this one, that wave was to the upside, and this one, Robert says, is going to be to the downside. And somewhere, guys, I think it really does make sense, and he's presenting a lot of different data points that is backing up. So it's not really like made out of thin air. He really has a lot of data points. I'm just going to share one data point with you guys, but he just shares like 50, maybe even more data points why he thinks that we are at a macro top in the regular financial markets. And for example, here we have a chart about the valuation of tech stocks that are losing money on a yearly basis. So you have a tech company that is not making profit, is losing money on a yearly basis, and the valuations right now are going through the roof, while actually no one is making profit. Right, so that is kind of insane. And like, he has multiple of these charts that all show that what we are seeing right now in the economy is just not really making any sense. And I think you guys can all agree, like if we have a look at the S&P 500, for example, right here, and we have a look at the interest rates are super high, while the S&P 500 is also quite high. And this is, for example, the cycles that I'm tracking right here. And what I've also been saying in my past couple of videos here on the channel is that I do expect a major low in 2026. And I have multiple cycles that actually point towards that year. So that's why it's so significant for me, because it's not just one cycle that shows me like, oh, that is going to be an important year. No, there are multiple cycles, and they all fall down on that 2026 year. And what I've also been saying this one is that we have, for example, right here, bottom of the business cycle was in 89. Well, that is actually also the year that Robert Prechter is starting his first wave. Then we have the top of the business cycle was here. That was, and guys, do take in mind, like, these bottom of the cycles and top of the cycles, these are determined based on time and based on a cycle and time. This is not, I did not randomly put that line right there at the specific top and the specific bottom. So that is the crazy part, right? So this was the low of the cycle, and you can see it was actually a couple of years after the low. So 1.5 years after the low. So it's also not like direct on the date that this is all super correct. No, but this is just a general ebb and flow of the markets and a general topping period, general bottoming period, based on basically based on the cycle of human emotions. So here we have the bottom of the cycle, which is pretty close to the bottom. Here we have the top of the cycle, which is exactly at the top. Here we got the bottom of the cycle, exactly at the bottom, and here we had the top of the cycle. And this is interesting because we were at resistance, right? We did make a higher high right here, still at resistance, but we got rejected. Recently we also touched resistance, we got rejected. This is a resistance level that we haven't been breaking since the year 2001. So we are roughly 23 years trading below this resistance without breaking, and we are approaching 2026, the bottom of the business cycle. And I told you in the previous videos as well, I don't know how this is going to look, whether we're getting rejected right here and then going to come down, or whether we just get a last rally and then going to come down. I don't know how this is going to look, right? I just think that 2026 is going to be an important year. And if we have a look, for example, at interest rates right here, other macroeconomic data, then you can just see that something in the economy is not adding up. And that's also crazy with where value goes. For example, with NFTs wise, we can see that the trading volume, for example, on Bitcoin NFTs or Ethereum NFTs is quite high, and images are being sold for 10,000 US dollars. Right, there is literally an image being sold for 10,000 US dollars, and that's also what Robert Prechter says, is that at the end, at the major peaks of these cycles, we are seeing a lot of money going into things that don't really care value. And don't get me wrong, because I get the value of NFTs, and of course, if you have an early NFT on Bitcoin, Pepper Pixel, for example, I love the art. I love it's the first airdrop on Bitcoin, so it definitely has some sentimental or historical value over there. But if we are in a recession, right, and you don't have money to pay the electricity bill, like a image on your phone doesn't make any sense, right? That it only makes sense when we are in when we are in times of prosperity. It is also a lot of speculation, so it really depends on certain situations. When everything goes up, there's a lot of speculation, and you have a lot of cash flow. You have a lot of money. You don't need to worry about groceries and paying the electricity bills. And you have extra money to speculate, and you buy NFTs. That is a different situation than when money is super scarce, because interest rates has been high, the markets are coming down, the risk is really getting off the table, and you won't invest 10,000 US dollars in a image on the blockchain, right? Not really quickly. You would use that money to survive, because surviving is more important than owning an image on the blockchain. That's just what I'm trying to say. Don't get me wrong, I'm still very bullish on ordinals, and I think that we are in the later part of the cycle. A lot of liquidity can flow to these projects, and there is a lot of money to be made, maybe sometimes even more than in altcoins. So in altcoins you have circulating supply quite high, but most NFT collections have a circulating supply of 10,000, some even lower. So Pepper Pixel has like roughly 1,200. So imagine there are only 1,200 of these Pepper Pixels. So I think that is actually quite bullish, because there's a lot of scarcity in the NFTs, and that's also what makes what creates this value for it, right? But I also really dig the vision of Robert Prechter, because it really suits with the thing that I'm watching, and that's the 16-year cycle. And when I'm looking at my cycle count, it also looks like we already have seen the top of the business cycle, and maybe what we are seeing right now is just a wave 2 right here. So we have like wave 1, this is a wave 2, which is followed by a very strong wave 3. And how high this wave 2 goes, we don't know. Maybe we get rejected at resistance again, but maybe we overshoot it first. Often right before massive recessions, we have massive rallies. Look at this. Before this recession in the year 2000, we had a massive rally in a very short time frame. So it looks like we always rally into these recessions. So it also doesn't really make sense to, for example, right now already think too much in doomsday scenarios, because it's still possible we are going to rally crazy before it actually all starts, right? So yeah, and how then do you know when it starts? Well, that's very difficult. I think timing is very important, and I've said it already from the beginning. Let me bring out the BLX chart, guys. My apologies if this video takes a little bit longer than expected, but this is already the chart that I've been talking about since the low right here, and I've already made this chart actually like at this specific moment, that's what I shared in my video as well. I made this chart at this specific moment saying that I'm going to go all in, or actually waiting for that last capitulation event between October, November, and that I'm going to wait for Bitcoin to be between 12 and 20k. Well, it went to 15k. That was for me the confirmation. It's 15k, October, November, liquidation event, going all in. It was a really easy bet because I already had that in my mind right here. Now Bitcoin is taking off, and this yellow box is the moment that I think we are going to see a top in the Bitcoin price, and that is the last quarter of this year, or it is the first quarter of next year. I personally do think that, but I'm also very aware that most people don't share that same opinion. And I'm also very aware that I can be completely wrong in this. So this would be the 16-year cycle. Maybe we go even up till, I wouldn't say 200,000 US dollars, but we still can have some very explosive moves right here. But maybe I'm wrong, and we're going to see a 4-year cycle where we top way later and way higher, and then the doomsday scenarios is was not really necessary. But then I'm thinking about that, So okay, let's say I'm wrong with that, the doomsday scenario, and that Robert Proctor is wrong, Let's say we are wrong. Then it's actually even not that bad. It's still better to be prepared for it, because just hear me out on this one, because this is actually very important, and I'm thinking a lot about this. Like, let's say it doesn't happen, right? The bull market just continue, the market is good, and things continue to go up. Well, it's way easier in those times to make money, right? So probably you don't have yourself like that much financial problems. Also, not because you're in crypto, things are going up, market is going good, especially when you work in crypto, it makes it even more dependent on the price, right? So the only difference is, if you took profits earlier, is that instead of 1 million, or maybe instead of 100,000, you could have 300,000 or 400,000. Or maybe instead of 500,000, you could have 1.5 million, whatever the amount is. Or maybe 5,000 could be 15,000, But the thing is, the quality of your life is probably not changing in such a way that you really have to lower your standards below the average of your country, And if it does happen, we see that crash, at least you're prepared and you have something behind. So also then, if it does happen, you don't really have to lower your standards directly, because you're prepared for it and you have a little bit of a buffer. You don't have any debt, you have cash reserves, you have gold reserves, you name it. So this is what I'm trying to say, like, we can sometimes be really greedy, and I also experience those emotions that we want to take everything from the bottom of the can. But sometimes it's also just good to, depending on your own personal situation, but to prepare whenever you believe also that maybe something bigger is going on in the background, and that this sooner or later is going to turn, and that then actually the real problem starts. I definitely think that there is a high probability that we are going to see something like that. And like I said, I don't know how it's going to play out. Maybe we break it first, or maybe we don't break it and we're going to come down. But I do think sooner or later we're going to come down. And then the big question is, of course, everyone asks themselves, what happens with Bitcoin? Because Bitcoin does have utility, right? Especially when there is so much unstable uncertainties in the economy, uncertainties in countries. The moral of the law is also changing, and people are moving to different countries. So there's definitely a big utility for Bitcoin, because it's way safer to store money in Bitcoin. So I'm not really sure yet how that is going to play out, right? Because there is a utility for Bitcoin, and I would also, as part of that exit plan, I would always have a bag of Bitcoin which never will be touched. If that utility, if there will be a situation that everyone flees to Bitcoin, which I see definitely as a possibility, because Bitcoin makes things just so much easier, right? So if you have a bank account, for example, in America, and suddenly something goes wrong with the government, and you have, for example, physical gold and a bank account, well, try to fly out with physical gold and your bank account is being blocked by your government, right? So that is not really a safe way of moving with your wealth. And Bitcoin really solves like a problem like that, because you can just have that key phrase in your head, fly to another country, and just remember that key phrase and get access to your Bitcoin, right? So definitely there's utility for Bitcoin, but the flip side of it, and that is the other side, is that Bitcoin is already in a secular bull market, and maybe these things are also already priced in. Same with the dot-com bubble, right? The dot-com bubble, and that also I think is very, very interesting. The internet has utility, right? The dot-com crash actually came down, as you can see right here, after the year 2000. We had massive corrections, and this was also for the housing market crash. But do not get fooled, like the internet adoption continued. It's just that the markets went down. So you can compare this, for example, with the Bitcoin price. Like the Bitcoin adoption can continue to be there. But while the adoption continues, similar with the internet and computers and digital websites right here. I mean, in 2009, there were way more internet users, internet websites, internet businesses, or companies that make use of the internet than back in the year 2000. But the prices in 2000 were higher, and that is because of the anticipation of what's happening there. And that's also what we see with Bitcoin. A lot of things that is looking in Bitcoin. This is all the anticipation of what Bitcoin can do for society. So we see the secular bull market, and I think the secular bull market will sooner or later be followed by a secular bear market. But yeah, guys, I'm also very aware of it that I can be wrong, and we are already at a 23 minutes video. So guys, I'm also going to wrap it up right here. I just wanted to share that we made a very nice altcoin call over on Will Alerts. That was ChainGPT. We bought this roughly at, I think it was at 10 million market cap. Right now it's up last week 54%. So that is very beautiful. I think altcoin season is coming around the corner in December right now. If you want to know more altcoin setups, if you want to get more information on the cryptocurrency markets, make sure to join Will Alerts. You can do so by scrolling below this video. Join Bybit, BingX, or BitGet. And once you join one of these exchanges, you meet the deposit requirements. You can submit your user ID over on the Will Portal website. And on Bybit, you can get the deposit bonus up to $30,000. And on BingX, you can get a deposit bonus up to 9,600 without any KYC. And you can trade the regular financial markets right here. So if you are planning to short the regular financial markets whenever we are entering a recession, you can do that over on BingX with US dollar Tether. And BitGet, also a beautiful exchange, has a lot of altcoins that we have been talking about over on Will Alerts as well. You can get a 5,000 US dollar deposit bonus. So guys, definitely reserve your spot for Will Alerts. Join one of these exchanges and also support the Will Portal platform. Very much appreciated. Then I want to wish every single one of you a beautiful day today, and I hope to see every single one of you in the next video.